Economics chapter 16, money and banking. So we start with money. So forms of money. The main forms of money used in most countries are coins, notes, and bank accounts. Coins are often used to make small purchases and, and are given in change. Notes are used to buy more expensive items. In most countries, the main form of money is bank accounts. These are responsible for the largest proportion in terms of value of payments made. There are numbers of ways of transferring money from one bank account to another. This includes direct debit, credit cards, and mobile phones. Forms of money. But before we go into those forms of money, what is money itself? Money is anything that has a legal identity, that has a legal backup. That means it is backed by law. So it is generally accepted by the people and it is backed by law. So we can use it to exchange goods and for goods and services. That is money. But the forms of money we have are basically the bank accounts. So because in the bank account, that's where your money is. Yes or no? You keep your money in the bank account. So the bank account acts as a form of money. So whenever you need money, you go to wherever you need money, or whenever you have to do a transaction, you do it through your bank, either by direct debit or credit cards or through mobile phones, mobile banking. So although bank accounts are the most important form of money, they are not legal tender. Whereas coins up to a certain value and the banknotes are. Legal tender is any form of payment which by law has to be accepted in settlement of the debt. The bank account, you can't just tell me that, oh, I have a bank account. Does that pay my money? No, it doesn't. Until you give me a legal tender, money from that account, maybe through the check or through a direct debit or mobile mobile phone transfer. That is when you have paid your debt. So that's why bank account will not be classified as a legal tender. You can't just give it to me. Yeah, I have a bank account. Can you just go to the shop or to the supermarket and tell them, I have a bank account, I want to buy all these things? No. You need a legal tender. That means you have to tender, you have to give them something that is backed by law that would help your transaction, that will make the exchange go easily. Do you understand? Yes. Without a legal tender, there's no transaction. So either you use your POS or you use a direct debit or whatever it is. For anybody that you have to exchange goods from needs payments. That is what they are saying there. I think it's clear. Yes. So a person has to accept bank notes in payment, but they have the right to refuse. For example, a credit card in practice. However, most people and the firms find payment from bank accounts convenient and hence are willing to accept it. So if you have a transaction, if you need to buy a product or you need the service, you have to pay for that service. You have to pay for that goods. You won't just tell them that you have a bank account. They will gladly accept a transfer from you because it's convenient. Not like giving them a check that they have to go to the bank some distance far away from their business. They have to maybe face the queue. Do you get it? Yes. So here you could just do the transfer, and I receive it immediately. That is what they are saying there. I think it's clear. Yes. So go to the functions of money. So for the functions of money, they said money carry out 4 functions. It acts as 1, a medium of exchange. 2, a store of value. 3, unit of account. 4, standard of deferred payments. So we start at one at a time. Money allows the medium of exchange. Money allows people to buy and sell products. In carrying out this function, money is said to act as a medium of exchange. Products are exchanged for money, and that money is used to buy other products. So the first function of money is that it acts as a medium of exchange. So if we need to buy a product, we need to give the business the money. The business would need to use the money to buy another product. So that is a medium of exchange. Is it clear? Yes. So money is used to buy or to purchase goods and services. Is it clear? Yes. That's the first point there. So the product money products, that's just how exchange goes. The consumer will pay for the consumer will buy the product, make payment. Then the payment will be used to buy other products. That is what the point is saying there. So the next paragraph, they said, enabling people to exchange products is money's most important function. Acting as a store of value means that money can be saved. So the next function of money is money acting as a store of value. So it means that you can keep if you don't want to spend your money now, you can keep it for a later day. So that means money can be kept for the future. So if you have $1,000 now, you can keep it in your bank account, you can keep it at home for more than a year, for 2 years, for any time you want to keep it. That's a store of value. Do you get it? It will be pointless. It will be pointless to save eggs, for example, as eggs go bad over time, and no one will be prepared to accept them a few weeks after they have been laid. Money, however, does not deteriorate with time and hence will be acceptable in the future. Money acts as a store of value, unlike egg. You can't keep egg for a long period of time. It deteriorates. It gets spoiled with time. Yes. But money, the amount of money right now will be accepted in the future. So if you are not spending it now, you will spend it later in the future and it will be accepted. You get it? Yes. Money can also be used to place a value on an item. So money as a store as a unit of account. So that means money is used to put price or to place price on an item. Just imagine without money, without having a value for money, that means we won't be able to price things. Oh, how much is this laptop? It's $5 because we are able to place a price on it. Without money, we won't be able to place price on money on a product. Yes. So that was one of the problems of the barter era, trade by barter. One of the problems of trade by barter is that you cannot have a unit of account. You can't even have store of value. The medium of exchange is it's even for the medium of exchange, you need to find someone. There has to be coincidence of ones. You need to find someone who has what you need and who needs what you have. Yes. So, but money doesn't do these things. If you need a phone, you get it with your money. You don't have to exchange a shoe with your phone, a clothes with a phone. No. So because of barter problem, that's why money was introduced. And money was able to solve all the barter problem. Do you get the point? Yes. So money can be used to place a value on an item. So prices are expressed in monetary terms. Oh, it's $10. Oh, it's $15. Oh, it's $100. Oh, Cristiano Ronaldo is $30 million pounds because there's money. Without money, we won't be able to measure the worth of those players. Clear? Yes. The fourth function of money is to act. That's the last paragraph, please. The fourth function of money is to act as a standard of deferred payments. So this means that money allows people to borrow and lend. Because there's money, I will be able to borrow money. I will be able to borrow now and pay at a later date. I will be able to pay the same amount at a later date. But if I have to borrow bottled water from you, maybe the next time I want to give back to you, I might not have bottled water. Then there's a problem. But with the presence of money, we are able to borrow, we are able to lend. So I can borrow from you, you can lend from me. You can borrow from me, I can lend you. Because the money doesn't change. Do you understand? Yes. The value of that money doesn't change. The only thing that changes about it is inflation. The what you can use the money to buy now, you might not be able to use it to buy it in the future because of inflation. But the $10 of now is the same $10 of next year. But what you will be able to buy with $10 now, you might not be able to buy it with $10 next year because of what? Inflation. But still, money is a store of value. It reserves that value. The 10 is still 10, now till any time. But what the 10 can buy might change. Is it clear? Yes. So we go to the characteristics of money. Right. So to act as money, To act as money, an item does not need to have intrinsic value. This is that it does not have to be worth something in its own right. For example, both silver and banknotes can act as money, but whereas silver is wanted for a variety of purposes, banknotes have no intrinsic value. Any item does have to possess a number of characteristics for it to serve as money. The most important one is that it should be generally acceptable. If people are not prepared to accept the item as payment, it will not be able to carry out the function of money. So to achieve general acceptability, the item has to be limited, to be in limited supply. Why, for instance, should people accept twigs as payment in a country with many trees? The other characteristics an item needs are that it is durable, will last some time, portable, can be carried out around easily, divisible, can be divided into units of different values, homogeneous, every note or point have the same value, should be exactly the same, and recognizable. People can easily see that the item is money. So the characteristic of money, I have to say it now. The features of money. One of the features of money is general acceptability. So money must be generally acceptable by the people. If not, it won't be able to function, to carry out the function of money, which is the medium of exchange. Because I am not accepting it, he is not accepting it, you cannot spend it. Then you cannot get what you want from me, you cannot get what you want from him. So for money to serve the purpose or the function of money, it needs to have the characteristic called general acceptability. Money must be generally acceptable or accepted by people. That's the first characteristic. Clear, right?
Yes.
The second one mentioned here, durability. Money must be durable. So that means money must be easy, it must be able to last for a longer period of time. These are paper. When you take this paper, this is a paper, sorry. Yes. This is a tissue. When you put water on it shrinks immediately and it goes spoiled. It goes spoiled immediately. It's over. But when you take money, I think I don't have any money here. You have dinars or whatever there.
No.
No. When you take money,
yes.
When you use money, when you pour water on money, it will still stay and to stay as long as it's possible.
Yes.
So for it to be money, it must not be like this. It must have a long lifespan. To get the point. So money must be durable, durability. It must have a very long lifespan. That's the second point. The third point about money is divisibility. There's portability, I'll talk about it anyway. Yes. So for divisibility, money must be able to be split into different units. That's why we have one dinars, 5 dinars, 10 dinars, 20 dinars, 50 dinars. So we have different units, and money must be able to be changed. So when I buy something of four dinars, I give you 5 dinars, you have to give me a change of 1 dinar. It is possible because there's what? There's divisibility. So for it to be considered as money, it must have divisibility. It must be divisible. That is to different units. Is it clear? Yes. Now go back to portability. For money to be considered as money, it must possess the characteristic which we call portability. Money must be easily carried about. If it is like coins, what happens to coins these days? Nobody uses coins anymore. It becomes paper, yes or no? And now it's even cashless policy. Cashless. People use cards. The card, you take it away, around. So yes. For money to be what it is, it must be easily carried about. Just imagine if you have 10,000, even 100 dinars worth of coins with you. It's going to be heavy. Yes or no? Yes. So for money, it has to be what? Portable. Clear, right?
Yes.
And homogeneous. Homogeneous. Yes. Money must have a unitary form. So the 5 dinars in Libya, the 5 dinars in Tripoli must look the same as the 5 dinars in Benghazi, must look the same as the 5 dinars in Tobruk, must look the same as the 5 dinars in wherever in Libya. That is homogeneous. Do you get it? Yes. Money must be uniform. Is it clear? Yes. And the last one is recognizability. When you see it, you must already know. You can't tell me this is money. Even far away from here, I know it is not money. So when you see it from anywhere, you know it is money. That is the content. Is it clear?
Yes.
Any problem about the characteristic of money?
No.
So that ends money. So we go to banking. So when I talk about banking, you can see it. So when I talk about banking, they said banking is a major industry in a number of countries. It helps people to borrow and lend and carry out a range of other financial activities. By doing this, it enables more efficient use of resources and encourage the growth of output of economies. So banking, we talk about commercial banks. Whatever bank it is, commercial bank, mortgage bank, agricultural bank, the central bank is the apex.
Yes.
It's the bank of all banks.
Yes.
So whatever it is, banks is a major stay in the country, in the economy. Without banks, there's nothing. Because they help us to borrow, they borrow us, and they help us to save our money. You get?
Yes.
So we go to commercial banks. They said commercial banks are also called retail or high street banks. All three names tell something about them. Commercial indicates that they are business organizations which usually seek to make profits. Retail suggests that they are selling the public something. In this case, banking service. High street tells us that these banks are found in most towns and cities. So they are the banks we are most familiar with. Do you get the point they are making there? Do you get it or not?
Not really.
They said commercial banks are also called retail or high street banks. There are three names here: commercial bank, retail, high street banks. These three names indicate something. The first one is commercial. When we talk about commercial, it means retail. That means you are selling something. When we talk about commercial, it means that it's a business organization, that its aim is to make profits. That's why we call it commercial. Retail means you are selling something to customers. But what are you selling here? You are selling banking services, opening accounts, giving loans. They are services. And high street banks means that you can find them in cities, in the countries, in cities, towns, states, in the country. You can find them along the roads in cities. So that's why those three names goes with commercial banks. They could be called retail, they could be called high street banks, they could be called commercial banks. They are called commercial banks because their aim is to maximize profit. They are business organization. They are called retail banks because they sell services, banking services. They are called high street banks because you can find them across different cities, states in the country. Clear?
Yes.
So what are the role and the importance of commercial bank? The three main and traditional functions of commercial bank are to: one, accept deposits. What is deposit? That means accept money from customers for safekeeping. Lend and to enable lend. That means as soon as they accept deposits, they lend it out to customers. And to enable customers to make payments. So you can also pay payments. Making payments here means you are paying your debt, your creditors.
Yes.
It's not the same as depositing. The first one is depositing. You are saving money into your own account. The second function is to enable to lend customers money. And the third point is to make payments. That means you are making payments in respect of, on behalf of your clients or your suppliers. The commercial bank will allow that. Or you are paying taxes, or you are paying bills, utility bills, or whatever bill. So these are reasons why there's commercial bank. Is it clear?
Yes.
So we just go to the next paragraph. There are two main ways of borrowing from a bank. One is in the form of an overdraft. This enables the customer to spend more than what it is in her or his account, up to an agreed limit. We talked about that anyway. Interest is charged on the amount borrowed. So there are two ways in which you can borrow money from the bank. The first one is through overdraft. When we talk about overdraft, it means you are being allowed to withdraw more than what you have as your available credit balance. So you have 5,000, you need 5,005, and the bank allows you for 5,005 to withdraw 5,005. That is an overdraft. but you have to pay within a specific period of time. It's short term. Then the other one is the loan. Okay, here said, okay, the other one. The other way of borrowing is by taking a loan. This is usually for a particular purpose and for a particular period of time. Interest is charged on the full amount of the loan, but the rate of interest is likely to be lower than that of an overdraft. The difference between an overdraft and a loan is that an overdraft is a short term, and a loan is long term. So the interest you have to pay on overdraft might be higher than the interest you have to pay on a loan. I think it's clear.
Yes.
Okay. So this is to ensure that if loan is not repaid, the asset. So for you to get a loan, you need a collateral. You need a security, like a property. You need a mortgage. You can't just get a loan from the bank without any collateral security. Why do they need the collateral? They need the collateral in case you default the payment, in case you don't pay back. You'll be able to take the property, sell it, and take away their own money. You get it? For an overdraft, no. Mostly overdraft comes with your salary account. So if you are not paying, your company will pay because your salary comes directly to the bank account. So as soon as the salary goes to your account, automatically it's being withdrawn. It will be debited immediately. Is it clear?
Yes.
So the first two functions of bank effectively borrowing from their customers and lending to them means that they act as a financial intermediary. So commercial banks act as what? Financial intermediary. How? They receive cash from their customers, borrow it out to other customers. So lenders, banks, and borrowers. Do you get it?
Yes.
They accept deposits. And these deposits are not just going to stay in the vault. It will be used.
Yes.
So they give it to those who need them. You don't need right now. That's why you save it in the bank. Some people need it. It's given to them. They pay interest. They create money from there. That's what we call money creation. Do you get it?
Yes.
So commercial banks make most of their profits by charging a higher interest rate to borrowers than they pay to people who save their money with them. So the interest of borrowing is always higher than the interest of saving. So you pay higher interest when you are borrowing. That's where they make profit from. And they give you lower interest. You get a low interest for saving your money with them. They might even charge you for saving your money with them. So that's how commercial banks make their money. Is it clear?
Yes.
So the third main function of that, the third main functions that banks carry out is to enable their customers to receive and make payments. So commercial banks allow you to receive payment from your clients, from your debtors, and also you pay your creditors too, or your suppliers. So payments can be done through the banks. Payments can be received through the banks. You have to pay your tax, you can pay through the commercial banks. Commissions can be paid to you too, through the commercial bank. Is it clear?
Yes.
Other functions of commercial banks. Over a period of time, commercial banks have built up a range of other services that they offer their customers. Most commercial banks now provide and change foreign currency. Now, you have the dollar account. You need dollars, the commercial bank will help you. Not only local currency. So you can open, call it a domiciliary account. So when you can not only open your normal account, you can open a domiciliary account with your commercial bank. The domiciliary account means that you can keep different currencies in that account, dollar, pounds, whatever it is. We call it domiciliary account. Is it clear?
Yes.
It is. That means, why is it called domiciliary? It is domicile. The money is not in this country, but it's here in this country now. So it's domiciled here. I think it's clear.
Yes.
Now go to the aims of commercial banks. Are you there? So for the aims of commercial banks, the key aim of commercial bank is to make profit for its shareholders. Remember we said they are commercial bank. And because they are commercial banks, they are business organizations. They want to make profit.
Yes.
So making profit means they will be able to give their shareholders their dividends. That is the first point. So the main way it does this is by giving loans, which bankers often refer to as advances. Another aim, which can conflict with the key aim, is what is known as liquidity. So the first thing is they give loans. When they give loans, high interest rates are charged. So high interest rates becomes profit for the business for the banks. They'll be able to pay their shareholders. Yeah, the other one they said another way we aim is liquidity, money. Banks have to ensure that they can meet their customer requests to withdraw money from their accounts. Some few years back in Libya, there was liquidity problem. A lot of people will be stuck on the queue. There's no money in the bank. Why? There was liquidity problem. That is what they are saying here. So commercial banks must ensure that customers are able to withdraw when it is due. Do you get the point?
Yes.
Because it's not a fixed deposit, it's a drawing account. So anytime I have to go to my bank, I must be able to withdraw. That is the point there. Is it clear?
Yes.
So to do this, bank have to keep a certain amount of what are called liquid assets. These are items which can be turned into cash quickly and without incurring costs. It went down. Okay, back there. So we said the aim of commercial bank one is to make profit for its shareholders. How are they going to do that? They do that by charging higher interest to those that borrow money from them. The second one is liquidity. Commercial banks must ensure that there's liquid. If that means they must make available cash whenever their customers need them. That is why they keep some things aside like liquid assets. So these liquid assets are assets that they can easily convert to cash whenever they know that there's shortage of cash. That is the point I'm making here. The first aim of commercial bank is to ensure that their shareholders are able to get their dividends. So they get this done through charging high interest rates whenever they are borrowers, whenever they lend money out to customers. The second one is to make sure that there's liquidity. Because without liquidity, there's no bank. So liquidity means that customers are able to withdraw whenever it's due to withdraw. Commercial banks might not have money when customers need them. So what do? They try to keep liquid assets that can be converted to cash without any stress or without losing anything. That's the point there. I think it's clear.
Yes.
So these items which can be turned into cash quickly and without, okay, banks earn most of the interest by giving long-term loans. However, if they tie up all the money in such loans, they would not be able to pay out cash to the customers requesting it. They have to balance profitability and liquidity. Having some assets earning high interest but being illiquid, and having others earning low or no interest but being liquid. So for commercial banks, they have to strike a balance between liquidity and profitability. So if you need to keep some assets that can become liquid. So it is not that you have to give out loans every now and then. Try to give out short-term loans too, so that your money can be quickly retrieved, so that you won't have liquidity problem. So you have to strike a balance anyway. So this is the work of the credit managers or the bank managers. So you can call them the bank managers. So the bank managers, they know how to strike a balance between profitability and liquidity. Both are important for the business. They need profits. They do this by giving out loans, but they must not give out loans to the extent that they won't be able, they will be short of liquid. That is the point we're making here. So they have to strike a balance. Clear?
Yes.
So commercial banks will not survive without profitability and liquidity, but they must strike a balance. Sometimes you give long-term loan, sometimes short-term. Is it clear?
Yes.
So go to Islamic finance. In a number of Islamic countries, commercial banks are not allowed to charge interest on bank loans. This is because many Muslims regard charging of interest, sometimes called usury, as a sin. Traditionally, Islamic banks have provided finance for firms by lending to them in return for a share in their profits. In recent years, more US and European commercial banks have sought to expand existing branches and open up new branches in Islamic countries in the Middle East and Asia. Most employ Islamic Sharia scholars and experts who can issue religious edicts, fatwas, that approve financial products, including loans. The US-based bank Citigroup, for example, has created an independent Sharia advisory board of Islamic scholars to offer its advice. So, for Islamic banks, for Islamic banks, in Islam, it is a sin to take interest. So what do banks do? They will give you a loan. When they give you that loan, the profit you are making, the profit you make from the loan, they will tell you to put it into shares. So you're going to get a loan from us. You're going to make profit from the business. As soon as you make profit from the business, we would want you to buy shares from the business. So you become part of the owners of the business, part of the investors of the business. We're not going to take an interest. But the profit you make, the profit is yours. But we would want the profit to be used for shares in our company. Is it clear? That is the point they are making here. Any questions about it?
No.
We have to stop here. So we'll go to central bank in the next class.
Yes.